Thank you for joining Startup Portal's Equity Crowdfunding Summer Series. This week's portal, StartEngine. My name is Rick Leinbach. I'm a former public company CFO and currently an outsourced CFO to crowdfunding entities. And this week, we're walking through StartEngine as a crowdfunding portal and a couple examples of companies that currently have equity crowdfunding raises ongoing. So hopefully you learn a little and we can educate you with regards to the crowdfunding industry, and it may fit your business model. A couple of pieces to the puzzle from a company as well as an investor perspective is how does it fit? I want to make sure if I have a business and I do need to bring investors, I typically, and the industry typically, wants to see a model that scales. Investors want to see a future story. They want to get excited about your story. They want to see, hey, where are we going with this? The other component from investors is they want to see, hey, how can I get my money back? As well as what's the return on my investment? And how can I get liquidity? How do I cash out? And the third piece is the in-between. Who do I work with to go and build the equity crowdfunding? What portal do I go with to make sure that my story fits and my business model fits the crowdfunding portals? One of the things with StartEngine, as we'll see, is they're a larger portal. They have some advantages over others. Now, regulation crowdfunding allows companies to raise capital and essentially sell securities over a 12-month period of time, up to $1.07 million, and the individual investors don't have to be, quote, accredited or sophisticated. Everyone can invest as long as they're generating income for a living up to a certain percentage of their income. And obviously, if you're a company looking to go down this path, you do have to recognize that there's some compliance with the SEC. Now, there are 50 funding portals in place, all regulated by FINRA. Today, as I mentioned, we're talking about one of the bigger ones, if not the biggest, is StartEngine. And StartEngine has $150 million plus invested so far. Through 350 companies have gone through their portal, and they have prospective 250,000 plus investors. So if you're looking to raise capital on fundraising, certainly you're going to see StartEngine as one of those portals that you really want to have on your top 5. However, so just make sure that it is a good fit. And we'll see in our examples today that there are different elements and ranges of many crowdfunding portals. Some of the highlights of StartEngine, they have 9,000 shareholders of their own. So they have gone through crowdfunding. There's almost $4 million in their current crowdfunding raise. I think that's 7,000 investors if you do the average. But they have over 9,000 overall shareholders. Now, they're also Shark approved. Kevin O'Leary is an advisor, investor, and spokesperson. One of the pieces they're working on for this year is an alternative trading system, which allows that liquidity element as investors look to say, okay, now that I've invested, do I want to stay with them? Do I want to move on, etc. Now, StartEngine is the everyday angel investor platform. That's their goal, is to serve everyone that wants to come in and invest in a variety of different companies. And being larger in the industry certainly helps them have a portfolio of different investments for people to continue investing. One of the things with Mr. Wonderful is he is helping validate the industry. He's bringing light to a relatively new industry where someone that has just heard of it will have a little more confidence that, hey, wait a second, I've watched Shark Tank for 10 years now, and Mr. Wonderful probably wouldn't throw his weight at it if it wasn't something that's evolving and growing and obviously have money behind it. Even with that, you'll see that Beanstalk app is 50% owned by Kevin O'Leary. So he's also basically utilizing the platform to raise capital himself. So the types of raises they do, equity, revenue, profit share, we'll see that in a few moments, and convertible notes are just a sample of the ones. A fee breakdown. StartEngine is on the higher end of the fees. They have a placement fee from 7 to 12%, and they also take an equity fee, which is common with regards to some of the portals because it gives them skin in the game as well. And with a portfolio of 250,000 investors, eyes on your investment, that's upside for StartEngine as well as upside for the company as well because they're going to be marketing behind you. Now, the types of offerings they have, you'll see that we'll talk about Vegas winners, Furry Fortune in a moment. Beanstalk, I mentioned, it's Kevin O'Leary. He owns 50%. He's trying to raise $1,070,000 for his platform and currently up to $362,000. So he's been able to get 40% funded almost. Innovative Eyewear, has a product for Bluetooth technology embedded in eyeglasses. They're looking to raise $1 million. Brazo Tequila has already raised $728,000. These are good examples for StartEngine of a diversity of different companies, as well as a good example of the diversity of the crowdfunding industry and the types of companies it can support. So if you're looking to do crowdfunding, there are many companies to compare. Let's go back to Vegas Winners, where they're a sports data analysis and prediction business founded by Wade Allen Root. He's been in the industry a long time. He's looking to raise $1 million. In May of 2018, sports betting changed, and that Nevada was the only state that had legalized sports betting, but now every state has the opportunity for sports betting. Little financial snapshot, they've had some revenues in 17 and 18. They have some debt on the books they have to think about, and last year they had some dividends that they paid. Now, the reasons they have to invest in their company is they see sports gambling changing as all the states have the opportunity. Wayne has been called the king of Vegas gambling, America's odds maker, so he knows the business, he knows the industry. And then if you step back, and this stat may be a little off now with the coronavirus, but by 2020, 7 million gamblers in the US. So they're looking from a sports betting industry, they're seeing opportunity there. So all that leads to, okay, how do I build my model? How do I build my business? And they want to break down the use of proceeds and build an operational studio and web development, which I think are the two criteria that needs to be done. And then on top of that, they will have marketing dollars, public relations, StartEngine fees. One of the ways I look at how to break up the use of funds is really structure it that you break it up into 1, 2, or 3 different criteria depending on the amount of funds you're looking to raise. Something like $1,070,000, I want to have the first part is my primary need. So I would have the operations studio. I would have the web development to make sure I get operational. Then I would break up and say, okay, after that, part 2 would be the marketing component. And then part 3 could be potentially the public relations, just so the investor knows that I'm going to spend the first dollars on the most important items. I'm not going to go market before I go out and build the foundation, build the in this case the platform. So just something to think about as you're looking to build your business model for equity crowdfunding. Now, they've already raised $216,000 out of the $1 million they need. So I would say after they get the $300,000-400,000 of capital, they really can build that foundation. And looking at the industry right now, there are 17 states that have approved sports gambling. There are another 17 states that have it in the review process. So you can see we're going to have well over 50% of the U.S. states in a short period of time that are sports gambling embedded into their casino operations or separately. Most importantly here is their operations are certainly dependent on capital. So they need to really build that platform to scale. The other company that we want to look at is Furry Fortune. It's a feel-good story about a dog and money. Surprised Mr. Wonderful isn't invested, but you never know. But their model is a little different, that is profit sharing. It provides the upside, and their pure focus here is for investors to come in and be part of the movie. Not part of a company, but part of the benefits of the movie. So out of their $1 million, they have a budget of $500,000 that really kicks it off and gets the movie going. They have a solid producer and director, has experience. Brad Wilson has been involved in some significant movies, and he's been around a long time and knows the industry. And he's brought some producers that also have experience in the industry. So the investors do own the part of the movie, and they also share in the profits to the movie. When we're looking at sort of the underguts of the equity crowd sharing deal, a lot of times I like to go down to the actual documents. Here I pulled the LLC agreement, and they're pretty clear that investors not only share in the profits of the movie, but their goal is to get the investors their capital back prior to other distributions. And once that's complete, then you share pro rata. If it's less than that, then they cut it out pro rata, meaning if they only make $500,000, they would split the $500,000 up between all the investors. So their goal is to get investors that put money in their principal back first. Therefore, the primary owners really don't get anything until you get your money back. I really like this from a business model. And I think having deals like Furry Fortune, and this may or may not be the one, but allow crowdfunding to show that profit sharing, return of capital, equity, which is so important to individual investors, which they may not see in, say, small stock, OTC stocks or small cap stocks. Provides that incentive to invest, and knowing you're getting your money out first is really it's a win-win for both the company trying to raise capital, as well as the investor knowing that, hey, this is something that I have faith in, I have confidence in, I want to put my money in, and I know I'll get my money back first. That helps with the story, no doubt about it. Hopefully looking at StartEngine as well as the sample companies has allowed you to think whether crowdfunding fits your model. StartEngine certainly has size and scale. It should be on your top 5 list when you're looking at crowdfunding. Their trading platform that they're positioning for 2020 will certainly be a positive attribute. As we saw last week, that secondary market adds value to each of the companies and to the platform itself. Vegas Winners is certainly leveraging Wayne's experience. However, they really need to find their platform and make it work, obviously between competition and the timing of states opening up. Furry Fortune's profit sharing design certainly has upside for the investors and is a good example of hopefully crowdfunding deals of the future, where the investor getting their money back is a primary objective, and then everyone shares in the profits. So I really like the foundation of the profit sharing model. So we wish each of them luck as they're looking out to raise capital. But our goal here was to really provide that sample of portals, of companies, to have you think about what crowdfunding could do for your company. Does it fit your company? For us, we would love to have you reach out to us. We provide the front end assistance with financials, with just looking at your business plan, asking the questions, and helping you as you're going down the path of figuring out which portal fits you as well. So please feel free to contact us, call us, reach out social media. We have a Facebook group for equity crowdfunding, and we gladly answer any of your questions. We look forward to seeing you next week, Monday, July 27th, for our next round of Startup Portal Equity Crowdfunding Summer Series. Startup Portal does not receive commission by any stakeholder or crowdfunding portals. This presentation is strictly for informational purposes only.